Hi, Clint Kuhns here with Anderson Business Advisors. And if you have a personal residence that has increased in value beyond your $500,000 exemption, I'm going to show you how you can dispose of that property and not pay any tax. You know, recently I worked with a client who lives in California and they had a personal residence with over $1 million in gain in it. And their dilemma was, how do I sell it and avoid paying any tax on that gain? Because as you know, under Section 121, if you've lived in a house for 2 out of the past 5 years, you can sell that property and you can exclude up to $500,000 if you're married or $250,000 if you're single on the gain from the sale of that property. Anything above that's going to be taxed as long-term capital gains. Well, this couple's dilemma was $1 million or $500,000 more than what they can exclude under Section 121. So their question was, Clint, how do I sell that property and not pay any tax? Well, it's actually quite simple. Here's what I told them to do. I said, move out of your house and turn it into a rental. List it on VRBO, put it on Airbnb, but show the IRS that you intended to treat that property as a rental. I said, move to the new location where you plan to live, rent a house there, move into that, and then start renting out your old personal residence. Now, after you've rented it over into a new taxable year, now you've converted it from your personal residence to investment real estate. That is, you intend to hold it for investment purposes. So now we're no longer concerned with Section 121. What we're going to focus now is on Section 1031. Yes, you're probably aware of that, a 1031 exchange. You can do that with investment property. So here's a property that was formerly our residence and now it's become an investment. So we can sell that property and qualify it under Section 1031 so we can exchange all the gain into a new property. So what this couple did is they found a new property and they sold their personal residence under Section 1031, which by the way is no longer that residence because it became investment property. And then they rolled that money into a new property in a different state where they were currently renting. Now they bought this new house in the new state and they rolled all that gain into it, so they paid zero tax on it, and they listed that house out for rent for a little bit, and then they decided, get this, to move into it. Yeah, they moved into that rental. The gain from the sale of their prior residence now rolled into that new property. They moved into it, and now that is their new residence. That is how we avoided paying tax on nearly $500,000 in gain. We saved them $100,000 in tax by using a 1031 exchange. Now, the new property that they're living in, they have to live there for a minimum of 5 years in order for that to qualify under Section 121 in the future. So if they live there 5 years and they sell it 5 years from now, then they can exclude again up to $500,000 in gain on the sale of that property. So there you have it. If you're looking to sell your personal residence and you have more than the $500,000 in gain that you can exclude from the sale of a personal residence, turn it into a rental. Rent it for a little while, then do a 1031 exchange and buy a new property and eventually move into it. My name is Clint Kuhns with Anderson Business Advisors.